Hello and welcome to the Chart of the Week. My name is Pete Stolzers and I'm the founder of www.oneoption.com. If you're viewing the videos on YouTube, you'll only see the first 10 minutes of my analysis due to their time constraint. To view the entire presentation, please go to my blog. It uses the number 1 in the web address, and that video includes the stock I've selected for the Chart of the Week. My research site spells out the word 1 in oneoption.com. There, you can sign up for live online events and take the free 5-day trial. That gives you access to all of my research. The market's been keeping me busy and I haven't been able to keep up with my Chart of the Week videos. I hope to get back on track in the new year. Since 75% of all stocks follow the market, that's where my analysis starts. Let's take a look at the market. This is a graph of the SPY, the S&P 500 depository receipts. In looking at the chart, you can see the dramatic decline that we've had in the course of the last year. In fact, almost a year ago, we were peaking out at all-time highs on the S&P 500. The market moved sideways, had a bit of a dip in August, stabilized, and then when we took out this 120 support level on the SPY, the market fell very, very quickly in September and October, and we established a new relative low in November. Overall, this chart is very bearish. However, we are starting to see that this precipitous decline is starting to flatten out a little bit in year end. So let's zoom in on this very tail end price movement and see if we can pick up any information. This is a 1-month chart. We can see how the market came down, made a new relative low in December at SPY 75, and that's actually a little bit more than a 50% retracement, which is very significant. Usually on a 50% retracement, the market will find some support. It immediately rallied up and established a horizontal resistance level at 90. Market pulled back, making a higher low, and it charged up to the SPY $90 level again, and then gradually pulled back. So this $90 level seems to be horizontal resistance. On a 1-week basis, we can see that it actually got up to about the $91 level. The market pulled back very sharply, almost tested a support level at SPY 85, and then today the market has rallied higher and it's actually taken out that relative high at SPY 91. We'll go back to the 1-month chart. So we have a breakout on a 1-month basis based on today's action. The long-term trend is still down. However, if we can get through this minor resistance point, the next resistance level will be SPY 100. We are heading into year end, and I do feel that since the market's flattening out a bit, there's been a tremendous amount of selling. Most of the people that have had to liquidate portfolios have done so. The shorts also have nice profits. They'll be eager to lock them in. This breakout above minor horizontal resistance at SPY 90 could fuel a little bit of short covering, and we could see the market run up to SPY 100 over the course of the last 2 weeks of the trading year in 2008. Also realize that portfolio managers will want to try and mitigate losses, so they would like to goose the market higher going into year end, and the volume will be dropping off, which should give them a clear path to doing so. So this week I'm going to be approaching the market from a bullish perspective. However, I am long-term bearish, and this bullish trade is just trying to take advantage of a possible bear market rally. For this week's setup, I'm going to be taking a look at a pattern that I call BDRE trend. It's a bullish day reversal early. The stock has had at least 3 consecutive higher closes, and it's trading higher than the prior close. The stock is trying to reverse a recent pullback and resume a long-term uptrend. Now there aren't going to be a whole lot of uptrends that we're going to be looking at, so what's most important for me to see in these charts is that the stock has formed a solid base, and then now it's starting to climb higher off of that base. Ideally, I'd like to see it basing for at least a month or two so that I know we're not just getting a little short covering rally, that this is a solid platform for the stock to actually be moving higher from. I have about 80 proprietary searches. BDRC trend is simply one of them, and we'll be looking at all of these candidates. So what I do is I click on each one of these symbols and I bring up a chart. We take a look at each chart individually, and then we're looking to find the best possible candidate for the chart of the week. The first stock is PBR, Petro Brazil. Like most energy stocks, you can see that it peaked out here in May, June, and then had a very steep, steady decline. The stock has been able to find support of the $20 horizontal support level, and it's starting to move higher off of that support level. On a 1 month basis, we see choppy action. It has moved through horizontal resistance at $22. And on a 1 week basis, it's been choppy but trending higher. Not a bad candidate, but I'd like to move on and take a look at others. ABX is the next stock, and we can see that it traded in a fairly tight range between $40 and $52 for most of the year. In August, it finally did break down with the rest of the market. After it penetrated horizontal support at $40, it traded all the way down to $20. Subsequently, we've had a nice move higher, and that's going to come through on the 1 month chart. We can see that this looks much better than PBR already. We had a nice breakout above horizontal resistance at $30, and the stock is moving higher very quickly. On a 1 week basis, choppy, but a nice trend higher. Here we have Silver Standard Resources. This is another gold mining company. Again, we can see that it had a tight range in here. It did finally break down in August, as ABX did. Formed a nice solid support level. It dipped down briefly to about the $6 level, and then now it's been grinding higher. It's been able to move through this horizontal resistance level at $10. And the 1 month chart actually looks very constructive, and it actually has outperformed ABX. Here we see nice steady buying, not nearly as much choppy action, which tells me that the buyers are very persistent. I like this chart. This is a chart of TMX, Telefonos de Mexico. We can see that it was fairly orderly in its move higher, and then it fell off the face of the earth in June. Very steep decline, and now that it's been below $20, it's been basing, but I'm not seeing a whole lot to tell me that the stock has a pulse yet. So we'll keep moving on. It's got a nice little break higher. I'd like to see a little bit more action before I stick my neck out on this one. And this is actually a nice move today it got going. So this could be one to keep an eye on in the future, but it won't make the chart of the week. Silver WHEATON Corp, another not really a mining company, but what they do is they aggregate silver contracts, and they hold on to the silver, and then they sell the silver at higher prices as the commodity moves higher. We can see that it was in a fairly tight range. Like all the other mining stocks, it fell very sharply, formed a base, and then now it's starting to come up. And this is actually a nice price movement off a very low $3 level, but it's been very consistent in here. So I do like this recent price movement in the last month. And then here again we see very nice steady buying as the stock rallies